Hi everyone, good morning. Online, am I audible enough? Am I audible enough? Thank you. Right, today's sessions, of course, we are going to talk about performance measurement, right? I thought of doing a two past papers question. Make sure that would be, I'm just giving a small hint that will be tested where in the your mock paper as well. As I have told you clearly, for me, it's very difficult to do a prediction with regard to the what? Section C. Anything will be tested under Section C. But as I'm keep on telling you all, high probability of getting the questions were from your syllabus, risk uncertainty, uh, and what standard costing, budgeting, transfer pricing. These are heavily tested part where in performance measurement, where in your section C. Even though if there are no questions section C, anywhere it will be tested where in your paper. Please make sure these areas thoroughly. It does not mean you don't need to go through the rest of the topics. So with regard to the PM, according to my experience, you should have about 360 view. 360 view. Today, of course, we are going to talk about performance measurement. My plan is to cover two past papers question, 20 marks question under performance measurement. And then again, we'll be, you know, talking about, I know you have already performance measurement, right? Right. Performance measurement. You remember we have been discussing about transfer pricing, right? Under transfer pricing, we talked about responsibility center. Do you remember that? What is meant by responsibility center? You remember we talked about the divisions. Am I correct? First, you remember we talked about cost center. Do you remember that? The division which has only but cost. Can you go back and check the notes which I have shared with you all with regard to the responsibility center? Not there. I have shared the what do you call snapshot with regard to the. Do you remember that on the transfer pricing? Before we get started with the transfer pricing, I shared you the responsibility centers notes. What is meant by cost center? What is meant by revenue center? What is meant by profit center? What is meant by investment center? Right? You remember why are we doing a divisionalizations? What's the purpose of doing the divisionalization? As the organizations, increasing their sales, right? When they are organically but growing, complexity also what will increase. So owner cannot get into the operation alone. Am I correct? He needs a team. Then he will split the what organization into different departments or divisions, right? Under that we talked about cost center, the division which has only what cost, the division which has what only cost. Then we talked about what revenue center, right? And I have given you the what are the performance measurement for the cost center. You remember that cost per unit, cost variance analysis. Am I correct? Then we talked about what revenue center, the division which has only what income, the division which has only what income. Third, we talked about what very important. We dealt that part with what transfer pricing, profit center, the division which has what income as well as what expenses is known as what profit center. Most of the transfer pricing questions or the transfer price which would take place most of the time between the what profit center. It does not mean not between the other center, generally between the what profit center. Then only the concept transfer pricing which will be born. Otherwise the transfer pricing is not necessary. As long as if you are a cost center, you don't need to charge the price for what your product, the cost what you have incurred, the same cost you can transfer to the what next division. That's a normal operations. Am I correct? Then we talked about very important division, which is what investment center. Just go back and check what is meant by investment center. Investment center is a division which has what the division which has what income, expenses. Not only that, they are held responsible for what return on their investment. Am I correct? It's there, no? Just check what is exactly meant by investment center. Am I correct? A division. Can you read that one? What is meant by investment center? No, I have shared the notes to you all. I remember. Just check these notes I have shared to you all. I remember. This part we took this snapshot. Sorry? It's there, no? It's there. I have shared. I remember. I took the snapshot and I have shared. Are you all having any problem with sounds? Am I audible enough, online students? What is meant by investment center? The division? Cost? No. Cost, revenue, and what? Very good. The division which has what? Not only the cost and revenue, but also they are held responsible for return on their investment. Because that is the proper, meaning which is giving you for the name of what? Investment center. What is the return that you are getting the what? For your investment. Right? So after you are doing the divisionalization, if you are giving the complete autonomy for that divisional manager for the investment center, they will be check their performances based on the return that they have got from their investment. Do you agree with me? So when they are checking this return, first of all, you'll have to give the autonomy for what? That particular divisional manager. They can use their assets, non-current assets, the way they want to generate the what? Profit for the company. So now under performance measurement, the main part that are we going to discuss with regard to the what? Investment center. We are going to check the performances for the what? These what? Investment center. Mainly, we check the performance by using the two what? Performance measure. One is ROI. Return on what? Investment. Return on what? Investment. That is something like a what? ROCE. ROCE. That is what? Controllable profit. Controllable profit divided by what? Controllable capital employed. I have clearly explained you when we were doing the transfer pricing, what's the purpose of applying the controllable profit? Because after giving the, complete autonomy to the what? Your divisional manager, they will be checked that divisional what? Performance. We can't check the what? Company's performance. There are some expenses which is borne by the what? Company, head office. So head office expenses, we can't pass it to the what? Divisions. If you pass it to the division, automatically divisional profit will be what? Less. Purposely we will underestimate, deliberately we will underestimate the what? Divisional performance. Then ultimately they will be paid the what? Less bonus. That's the reason we applied to check the real performance performance of the what? Divisional manager. We use the word of what? Controllable profit. Same thing for what? Controllable capital employed. How to calculate capital employed? It's similar to the what? Net assets. How to calculate net assets? You would have learned this part in financial accounting. Non-current assets plus what? Current assets minus what? Current liability. That is one way of calculating what? Net assets. Or current assets minus current liability, which is known as what? Working capital. Or net current asset, another name is. With that, you will add what? Non-current assets. You will be arriving what? Net assets or capital employed. There are a number of ways that you can identify the what? Net assets or capital employed, but capital employed is equal to net assets. Sometime you may be having a what? Different discussion when it comes to what? Financial accounting. You would have learned that part in detail. In management accounting, performance management, we are assuming net assets is equal to what? Capital employed. There is a bit of argument. No, it's different because there's a part called what? Liability. Some of the liability, overdraft and all, cannot be taken to the what? Because some argument. That is once again not part of our discussion in management accounting. Right, okay. I'm going to give you a clear-cut understanding now. Clear-cut understanding. You remember, we have been discussing about the transfer pricing. Transfer pricing, which would mainly, taking place for the profit center. When they are transferring the goods from one division to another division, the price that they are charging for the other division, which is known as what? Transfer price. Generally, it takes place for what? Or sometime one would be a cost center, another one would be a what? Profit center. Or sometime one would be a cost center, profit center, another one is what? Investment center. It depends. That's not a problem, right? But mainly for what? Profit center. If you look at the performance measurement, we do check for the investment center. When we are checking the performance for the investment center, first of all, you should know what is meant by investment center. Investment center is a division or divisional manager are held responsible for the return for their investment. Return for their investment. How to check the return cost minus what? Revenue. That's the reason. If you look at the investment center, they do have income, cost, and the what? Return for their investment. That is what is known as investment center. The way of checking the performance of the investment center, one is what? ROI, return on investment. How to calculate return on investment? Controllable profit divided by what? Controllable capital employed or what? Net assets. Net assets, right? Disturbing. Next one is residual income. That is another performance metrics. Performance metric. How to calculate residual income? How to calculate residual income? We discussed this part in the previous chapter under transfer pricing. Very good. Controllable profit minus notional interest times. That's correct, but you will have to give me the answer then and there, because you are having a mock exam today. You are having a real exam very soon, right? They are taking too much of time to give me the answers, right? How to calculate residual income? Controllable profit. What is the profit being generated from that particular division? Minus capital employed times what? Notional cost of capital. Notional cost of capital. I have clearly given the what do you call meaning of what is meant by residual. Residual means extra profit. What is your extra profit? If you have some amount of what investment, if you put that money where in the market, you'll be getting the what X amount of return. But your divisions, whether they have generated more than that or what less than that. If the residual income is positive, the performance is what? It's a acceptable way. You got my point. That is all about what? Residual income. Clear? Now, these performance measurement, transfer pricing, are usually tested. The organization, right? Organizations tend to have divisions. Tend to have what? Division. Then only you can check the what? Performance measurement as well as what? Transfer pricing, right? But if you look at performance measurement, as I have clearly explained to you, we may apply most of the what? Investment center. Check the return of their investment after giving what? Complete autonomy. What is exactly meant by complete autonomy? Let's say head office says maximum you can invest where in non-current asset only 1 million. Do they have a control now, or they do not have the control on the investment? Head office have given the instruction for the investment center division. Maximum you can spend only 1 million for the what? Investment. Do they have a complete control? No. Then if they do not have a complete control on their investment, at the same time, that amount 1 million cannot be checked with their more than 1 million, right? Because there are some restrictions. Am I correct? Cannot be checked with their performance. So you should have a you should give what? Complete autonomy for them to run the business the way they want. Am I clear to you? Therefore, that's the basic idea regarding what? Performance measurement with regard to the what? Investment center. Also, this divisionalization. What is meant by divisionalizations? Splitting the divisions into what? Different department. Different department. It can be a cost center, revenue center, or what? Profit center, or investment center. Anything. Intention is to improve the goal congruence or improve the company's profit. Improve the what? Company's profit. Not the intention of what? Increasing the what? Divisional profit. Divisional profit. So we'll have to make sure this divisionalization should disturb the what? To achieve the what? Goal congruence of the company. Sometimes this divisional manager may function dysfunctionally, may act dysfunctionally. What is meant by dysfunctionally? To achieve the what? Divisional profit instead of the what? Company's profit. By using the company's money, because the expenses which is borne by the head office, no? By using the company money, getting the what? Their benefit. That is what is known as self-interest. They may function, but they are working for the what? Suboptimal decisions. They are working for what? Suboptimal decision, not the optimal decision. What is the optimal decision? We'll have to achieve the what? Company's corporate objective, which is the what? Goal congruence. Goal congruence. What these people try to do, some of the division, what they will try to do, they try to act dysfunctionally to achieve the what? Suboptimal decision. What is suboptimal decision? Make sure to achieve a what? Divisional profit instead of what? Company's profit. Therefore, head office sometimes may involve after giving the what? Autonomy, whether they are working for a what? Goal congruence. That is the clear-cut understanding with regard to the whole part of what? Performance measurement and the transfer pricing. So here we are going to check the performance measurement by using the couple of metrics on the investment center. One is what? ROI, return on what? Investment. How to calculate return on investment? Controllable profit divided by controllable capital employed. RI, second part of the what? Performance measurement. Residual income, controllable profit minus capital employed times cost of capital. Right now, before we get started with the questions with regard to the what performance measurement, there are some performance measurement that you would have discussed where in I remember financial accounting. What are the performance measurement that you have discussed under financial accounting? Do you remember that? I remember. One is a profit ratio. And a profit ratio, what are the profit that you will calculate? Profit ratio. Can you take down these notes quickly? I'll give you clear-cut understanding with regard to what is meant by performance measurement and the what short notes. Quickly take down. Performance measurement and transfer pricing. Transfer pricing. Usually tested. The organization tend to have divisions. Organization tend to have divisions. Tend to have divisions. Full stop and continue, or you can make it a second point. These divisions are held responsible for return on their investment. Next point. These divisions should be checked whether they are functioning for divisional profit or company's profit. Right? Next point. Transfer price and the performance measurement technique has been introduced to increase the organization performance as whole. Organization performance as whole. Right. Quickly, we'll have a recap for what you all did in the financial accounting with regard to the financial performance metrics. Because some part of the financial performance, it may require to check the divisional performance. Right? Just quick, because I'm sure that you would have learned this part where in your financial accounting pillars, right? First one is a profitability ratio. What are the profitability ratio that you have discussed? Profitability ratios. First one is gross profit ratio. Do you agree with me? How to calculate gross profit rate? Because why it's needed when you are checking the performances of the divisions. As I have clearly explained to you, investment center, we may use what ROI or ROCE, return on capital employed, or return on investment, both the same, to check their performances. After checking their performances, the divisional manager will be rewarded as bonus if they are, because it happens over everywhere. Do you agree with me? It's happening everywhere. As long as if you are proving your performances, you will be given the bonus, you will be rewarded. Am I correct? After checking the performances of these two metrics, these organization divisions managers will be given the bonus. Sometime only checking these two metrics may not be sufficient, right? At the same time, we need to double check the some financial performance measurement as well. That is what profitability ratio, liquidity ratio, right? Then efficiency ratio, right? Then one more part I forgot, a risk ratio. These are the ratios that needs to be checked. Let's first talk about what profitability ratio. How to calculate gross profit ratio, gross profit margin. Very good. Gross profit divided by what? Sales. Gross profit divided by what? Sales. Next one is a net profit margin. How to calculate net profit margin? Net profit divided by sales. Am I correct? Next one is what? ROCE, return on capital employed. How to calculate return on capital employed? Operating profit, not the net profit, operating profit divided by what? Capital employed. But when it comes to investment center, Instead of using a operating profit, same operating profit, we use the word of what? Controlling profit. Sorry, controllable profit. But the controllable profit is different from what? Operating profit. It's not same, different. It's different because the divisions are check the performances based on what they have control on. They can't be check the performance, but they do not have control. What else? Sometime you talked about what? Assets turnover. Do you remember that? Assets turnover. How to calculate asset turnover? Sales divided by what? Capital employed. Capital employed. What it teach you? What is meant by assets turnover? Perfect answer. Perfect answer. What is meant by, look at the name of the ratio, assets turnover. What is the turnover? Turnover means what? Sales being generated from what? Your assets. From what? Your assets. Because why are you investing in assets? To do a business. So business come from the what? Sales. Am I correct? Therefore, what is meant by assets turnover? From your asset, what is the turnover being what? Generated. That is all about what? Profitability ratio. Am I correct? Then you have discussed liquidity ratios. Do you remember that? Liquidity ratio. What is meant by liquidity ratio? What is meant by liquidity ratio? Yes, very good. Very good answer. Liquidity means checking the working capital of the company. Checking the working capital of the company. Sometimes most of the companies are giving you what? Lots of profit. But every time they are having a financial crisis. They don't have a money to what? Pay for the employees. They don't have a money to do what? Day-to-day operation. But if you look at their financial statement, it's always showing as what? I can tell you very best example for it. Just have a look. If you keep on doing a sales, your profit will increase. Agree with me? If you do a more credit sales, if you do what? More credit sales, you can increase what? Your income. By increasing your income, you can increase your profit. Then the profit perspective, what you would say, the company is doing a what? Decent job. Company is performing. Company is going forward. Why? Keep on increase what? Profit. So the company does not have money to do what? Day-to-day operations. Since all the sales which they have made it as a what? Credit. Then they have given the credit period to the customer. Pay me after 6 months. Pay me after 7 months. Ultimately, what will happen? You will not have money to do what? Day-to-day operations. Therefore, the profitability ratio is not sufficient. You will have to check the what? Liquidity. That is what he said. We need to check the working capital. There's a word called what? Working capital. What is meant by working capital? The fund which is available to do what? Day-to-day operations. The fund which is available to do what? Day-to-day operations. That is all about what? Working capital. Am I correct? Therefore, you can't take the decision by just looking the what? Only profitability ratio. To evaluate the proper performance of the company, you have to place the finger on what? Liquidity as well. As you said, what is meant by liquidity? We are checking the working capital position of the company. So one way of checking the working capital of the company, you have done this part, current ratio. Do you remember that? Current ratio. How to calculate current ratio? Very good. Current assets divided by what? Current liability. Next one is acid test ratio or quick ratio. How to calculate? What is meant by liquid assets? Without? Very good. Current assets minus what? Stock or inventory divided by what? Current liability. Because if you look at least liquid item is what? Stock. Least liquid item is what? Stock. I know you'd have learn this part where in financial accounting, when you are writing the item under current asset, you will try to write the least liquid to most liquid. Am I correct? No, it should have been written, right? Whenever, because that is the proper, way of writing what you, because you can't put first what cash, second you can't put what bank, third you can't put what stock, fourth you can't put what. It's not wrong. It's not wrong. It's not a proper way of what placing the what item in the proper positions. Based on the accounting policy, it's not a concept policy. It should have been written where in your financial. I think that you can teach me this part because I'm not good in financial accounting. I'm only what good in management accounting. Since you have done what ACCA financial accounting, number of what modules that you have already covered, right? It should have been written where in your financial statement, least liquid item to most liquid item. What is least liquid item is the stock. What is meant by liquid? Equal to cash and quickly convert into what? Cash. Stock is what lease until you sell, you can't get cash. That is also what the condition should be about cash sales. Am I correct? That's the reason. First, we are writing stock. Next one is what? Receivable. Third one is what? Bank balance. Fourth one is what? Cash. Cash is a what? More liquid item. More liquid item. Bingo. Give me a minute. So next ratio is what? Inventory holding period. What is meant by inventory holding period? Or stock holding period? Stock holding period. What is meant by stock holding period? Do you want that? No need. Right. What is meant by stock holding period? Before how long that you are keeping what your stocks for health before it gets what? Sales. So my questions, how to calculate stock holding period? Stock divided by what? Cost of sales. The cost of sales is not given, you can put the what? Purchases. You can put the what? Purchases. Also, there are some arguments, some says what stock mean, which stock should have been taken, whether you take opening stock or closing stock. Some people says what? Average stock. You can take the average stock. Opening plus closing divided by 2 is a what? But you don't really learn this part in detail. No need to learn. It's in your study hub. Just to, I'm doing the recap. But main part of this is what? Profit ratios. ROCE. And sometime when you are interpreting the answer, you may require some other ratios as well. That's why I'm explaining. But the main part is ROCE and RI, residual income and return on capital employed. That is what return on investment. Next one is receivable collection period. What is meant by receivable collection period? Receivables collection period or debtors collection period. What is meant by receivable? Very good. So we'll have to maintain this ratio properly. So as I have clearly explained to you the previous example, we can't keep on doing the what more credit sales. As a part of the what performance of our division, we should check how long that we are taking to collect what this money where we made our credit sales. That's also much more important to maintain what our liquidity position. If you keep on increasing the what receivable collection period, it's not a what good sign for the company to what maintain their liquidity position, their working capital positions, right? That will impact, right? If the liquidity position is getting impacted, automatically that will impact what your profits. Therefore, you'll have to maintain properly what your working capital positions. What I have learned through the what number of cases, number of case study, what I have learned, practical scenario, what I understood, most of the company who closed down, not the problem with the profits, but the problem with the what liquidity positions. The best example, even Kingfisher Airline, right? Even Jet Airways. There are a number of companies, not because of the profit, but because of the what? Liquidity position is what much more important. So if the liquidity position keep on what accumulated, end of the day, that will impact what your profit. Therefore, we'll have to make sure not to what having the problem with the what liquidity position of the company. Clear? Next one is a payables payments period. How long that you are taking to settle your owing. That is what is known as payable. It does not mean keep on but dragging is a best sign, right? If you do not have a proper relationship, right? If you do not have a proper relationship with what your supplier, then that will be a problem for future purchases as well. So you should create the what repo with him. Am I correct? You'll have to be very careful. You'll have to be very careful. So that is all about what liquidity ratio. Next one is measuring the risk ratio. Risk ratio. One is what main one is what gearing ratio. What is meant by gearing? What is meant by gearing ratio? Very good. Increasing the from the online students. What is meant by gearing ratio? The main part of the risk ratio is what? Gearing. Debt capital. Sorry, capital divided by what? One option is debt plus what? Equity capital. Another option is debt capital divided by equity capital. Both are correct. So we are going to find out what is the ratio between the debt capital and the equity capital. Debt capital and the equity capital. Or you can get the ratio from your total capital. What is the percentage of what? Debt capital. Always you'll have to minimize the what? Gearing ratio. You'll have to minimize the what? Gearing ratio. As long as if you are increasing the gearing ratio, if it is a high geared company, what would happen? Yes, what would happen at the end of the day? The money what they are earning as a profit should have been paid for what? Interest. Should have been paid for interest? No. Whose profit? Whose money that is? The profit belongs to what? Owner shareholders. As much as what if you are taking the what more debt capital, if the fund is raised through the what debt capital, end of the day what will happen? The profit that you are generating in your divisions or the what company, you'll have to pay that amount as a what interest. These are the main ratio that you'll have to remember when you are when you are evaluating the performance of the what divisions or the company. Now quickly we will get into the what questions. Before I get started with the questions, once again I'm going to revise what is meant by controllable profit. The divisions are held responsible. What is controllable by them? There are some expenses which is not controllable by the division, that cannot be checked their performances. That is what is meant by controllable profit. Even for the controllable capital employees, until which extent that the autonomy being given to them. It does not mean whenever you are doing a divisionalization, you should give 100% autonomy. Can give certain, but maximum autonomy should have been given to the what divisional manager to check their performance. After telling them, right, you are an investment center, we are going to give the complete autonomy for you, but you can invest maximum 1 million. Then autonomy is not there. Am I correct? Then you can't check their performances by using what that particular non-current asset. You know why? You have given the instructions. Maximum we can give what? 1 million rupees. Am I correct? Let's say a division is having about 3 or 4 branches. So then head office has taken a decision to close down 1 branch under 1 division. Who has taken the decision? Head office. So when they are doing the disposal, if there are any expenses with regard to what that disposal, or winding up that particular business, closing down that particular branch, you can't pass the all the cost to the that particular division, because the decision which was taken by the head office. Am I clear to you? When the case is given to you, line by line, you'll have to check the each word, each sentences. Also, whenever you are evaluating performance of the business, don't blindly give the answer just looking the numbers. Right? Don't just blindly give the answer just looking the numbers. Line by line, you'll have to check the performances. You'll have to give an interpretation. Then only marks will be provided. Am I correct? So to sort out that part, we're going to discuss 2 20 marks question that will help you to understand exactly how are we going to check the company's performance. Clear? Just read the question, please. I'll explain to you how to do the questions. You just continue. After that, I will explain the whole part of the requirement. First, read the question, please. Read the questions. Right? Shall I explain? I'll explain, but you'll have to get started with the questions. Now you all almost what last class. Another two more classes to be done to finish it off at our hall part. Apart from today's class, we are having class Saturday and Sunday. Last week, most of them were on online on Sunday, but this Sunday try to make it for the physical session for you all, since that is the last class, right? Try your level best to come for Sunday class as well, right? Um, Look at the questions. When I'm reading the question, I'm going to highlight few points which is much more important for my requirement, right? If I fast forward all these particular case and if I go back to the requirement, one they say calculate the return on investment, ROI. You know how to calculate ROI, controllable profit divided by controllable capital employed. Am I correct? So we have not read the question yet. 30th number, ensuring that the base of calculation make it suitable for measure of assessing the divisional manager's performance. Second, explain why you have included and excluded certain items in calculating the ROIs, part A. Because when you were calculating, ROI, you have not taken the operating profit. You have taken only what controllable profit. Some item you have included, some item you have excluded. For that, you have to give evidence why it had done like that, right? C part, briefly discuss why it is appropriate to treat each of the division of the lens company as an investment center. They are talking about what investment center. What is meant by investment center? Investment center means the investment center, the divisions are held responsible for the return on their investment. Am I correct? Not only for what income and what expenses, but also for the return on their investment. Discuss the problem involved using the ROI measure manager's performance. Let's discuss one by one each requirement later on our discussion part. Now let's get started with our case. When I'm reading the case, some parts are very important. I will explain to you to answer for the first part of the requirement. Let's have a look. Lens company manufactures lenses for use by a wide range of commercial customers. That is their operations. The company has two divisions, the photographic division P and the optometric division O. Each of the division is run by the divisional managers. What does that mean? The head office given a complete autonomy. They can run the business the way they want to maximize the what? Divisional profits means what? Company's profit. Not the intention to what? Enhance the what? Company's profit. Sorry, divisional profit. So if you try to focus on the divisional profit, we call it as what? Focusing on the what? Suboptimal decisions, right? To achieve the what? Self-interest, right? By using the what? Company money. Look at the one sentence they have given. Run by the divisional manager who has overall responsibility for all aspect of the running their division, and the divisions are currently treated as what? Am I there? Am I there? What I've told you, most of the questions, the performance measurement which would be checked for the what? Investment center. So you should know what is exactly meant by investment center. They are held responsible for the return on their investment, right? Each manager, however, has a authorization limit of what? $15,000 per item of capital expenditure. Now only the headache will start. Now only the headache starts. After giving the autonomy, and because the whole part which is done by the what? Divisional manager and the head office who have given the instructions, capital expenditure. What is meant by capital expenditure? Non-current assets. Maximum you can invest how much? $15,000. Do you think it's a proper way of checking their performance by giving this particular amount for them? Do you think it's a good thing for giving the autonomy? after giving the autonomy, do you think telling them to maximum you can use is 15,000 where in your capital expenditure, is it a good move? Is it a good thing for them? No, not at all. Because now you are putting the what? Some part of a what restrictions on them. But after telling them what complete autonomy, you can use the way you want. You can buy the non-current assets. That is what giving the autonomy. But you are telling them what? No, no, no. Maximum you can go for a what? $15,000. So, but the initial part we talked about because it's needed when you're answering for the what part C. Because part C, that's why I read the question. Briefly discuss whether it's appropriate. Look at the part C requirement. Briefly discuss whether it is appropriate to treat each of the division of lens company as investment center. Now, can you say is it an investment center? Can you say initially you started the question that you are saying what? Investment center. But after some time you are telling them maximum you can use for the non-current assets is what? $15,000. Now, can you treat them as an investment center? No. They are not given the autonomy. They can't use the way they want. They can't replace their assets. Am I correct? Therefore, there will be a what contradict statement between the what part C and the what case of the questions. That should have been connected for that one. It's needed, right? Online student, are you all with me? Are you all with me? Sanjana? Emily? So today, of course, I have been different classroom. I feel bit of uncomfortable, right? Emily? Sanjana, are you okay? Priyanka is not there. Then Malavika. Malavika is there. Yes. Malavika, are you okay? Are you with me? Right. During the year, head office made a decision to sell large amount of equipment. Who has taken the decision to sell the large amount of equipment in the division P? Head office. Then are you giving the complete autonomy for them? Who has taken the decision? Head office. It's not taken by the what? Divisional manager. But you are telling them as a what? You are a what? Investment center. We are giving the what? Complete autonomy. You can run the business the way you want. Am I correct? Then most of the part which is involved by the what? Head office now. Am I correct? During the year, head office made a decision to sell large amount of the equipment in division P and replace it with the more technological advanced equipment. Now what will happen? Then they are replacing the what? Non-current assets. Am I correct? Then the net assets what will increase. Then when the denominators increases, what will happen? The ratio of the company. How do you calculate the return on capital employed? How do you calculate the ROI, return on investment? Return on investment equal controllable profit divided by what? Capital employed. Capital employed means what? Net assets. Now, when you are replacing the new one, so the new one would be what? More costly, right? What will happen? The what do you call assets worth will increase. Then what will happen? Their ratio decrease. The ratio what will decrease, right? So when you are reading this because it's 20 marks questions, no, you can spend at least 30 minutes time. At least you can spend what? 30 minutes time to do a proper analysis, right? It also decided to close the one division's O's factories. Who has done that? Is once again head office. Head office who have been involved of what? Closing the what? Divisions. So divisions, one branch, right? Divisions or factories in country deemed to be what? Politically unstable. That's okay, no problem. But if that decision would have taken by the what? Divisional manager, then they are held responsible. But this was done by whom? Head office. any expenses, any problem which they are going to experience with regard to the what? Closing what? That particular factory should be borne by the what? Head office. Not what? You can't pass it to the what? Divisions. Unfair. Am I correct? With the intention of opening a new factory elsewhere in the following year. Don't know. What is their intention? Closing and opening the new elsewhere. That is also. That's also not now. In the coming year. Both division trade with overseas customers. Right? Both division trade with overseas customer. Choosing to provide these customer with a 60 days credit to encourage sales. It is done by the head office or the divisional manager. Is it done by the head office? That both division trade with overseas customers. They are dealing with overseas customers. So they have given the 60 days credit period to the what? For the customers to encourage the sales. It is done by the what? Divisional manager. It is done by the divisional manager. Any impact with regard to the what? Exchange. Because you are giving the what? 60 days period. It may increase or it may what? Reduce. That should be taken by the what? Divisional manager, not the what? Head office. Because they are the people who have given the 60 days time. Do you agree with me? If they would have gone for a what? Cash shares, they won't face what? That exchange issues. Sometime during the exchange, there will be a loss or sometime there will be a profit. Anything can happen. But it should be responsible by the what? That particular divisional manager. Due to the differences in exchange rate between the time of invoicing the customer and receiving the payment of 60 days later, exchange gain losses often occur. That happens. Even though if they would have not mentioned that part, it is there. It is there. Excuse me, Sanjana, I don't get any sounds from you. Are you okay with the questions? Sanjana Devi, same Sanjana, no? Sanjana? Malavika, I got the reply. Nisho Joel, Rachana, Shastri. Emily, are you all okay with the questions? I read the whole part of the question line by line. Each sentences I have explained to you all. Right. Cost of capital is what? 4%. Cost of capital is needed whenever you are calculating the what? Residual income only. Residual income only. You remember how to calculate residual income. Thank you, Sanjana. The following data relates to the year ended 30th November 2016. They have given the revenue. They have given the gain on sale of what? Equipment. My question. Sale of equipment. Gain. Is it responsible of what, the divisions or the head office? Who did it that one? Head office. Therefore, it is not controllable income. It is not what? Controllable income. Even if it is a loss, that is also what? Not controllable income. Since it was done by the what? Head office. Next one is the direct labor cost. That of course what? Controllable expenses. Direct material is what? Controllable expenses. Divisional overheads, and they have put a star mark on that, and they say these divisional overheads, uncontrollable assets included the depreciations. How much? 320 and 460. Therefore, from the divisional overhead, that should have been what? Removed. Do you agree with me? That should have been what? Removed, because that is not controllable by the divisions. Do you all agree with me? Do you all agree with me? Right? Next one, they have given the trading profit, exchange gain or loss. You tell me, exchange gain or loss, whose responsibility? Division, because the credit period which is set by the what? Divisional manager, just to what? Increase the sales. Just to increase the what? Sales. Therefore, any profits and the losses which comes through the what? Exchange, should be what taken by the what divisions. Exceptional cost for factory closures. Whose responsibility? Head office. Therefore, we can't pass it to the what? Divisions. We can't pass it to the what? Division. Allocated head office cost, once again, is not for the divisional, what do you call, expenses. Divisional expenses. Net divisional profit 2,520, 1,220. The reason I have clearly told you, by just looking the what blindly the numbers. If you look at the numbers, you would say what P is performing well. Am I correct? Then what? Oh, why P's profit is almost what $1,000 more than what O's profit. But there are some expenses which are not controllable by the what that particular division. Same thing for the what non-current assets. Look at non-current assets. They have clearly given for us non-current assets controlled by the division and what controlled by the head office. Head office shall not be taken to the account, right? They have given the last para. To date, managers have always been paid the bonus based on the what return on investment. Return on investment achieved by their divisions. However, the company is considering whether residual income would be better method. They are considering RI is whether it's better to evaluate the performance than what uh, return on investment. Return on investment. Now, your requirement. Part A. Calculate the return on investment for each division for year entered, ensuring that basis of the calculation make it suitable measure of assessing the divisional manager's performance. You'll have to calculate what ROI for both divisions. Can you try quickly? I will explain. You try first. After checking the controllable profit, we double check, right, which division is performing well, right? Also, whenever you are dealing with the supplier, make sure not to jeopardize the what relationship with what your supplier. If you jeopardize the relationship with the supplier, he won't deliver the goods what on time. That's the reason always you have to make sure that's I have mentioned previously with regard to the what payments period for the what supplier. Some people what they try to do is they try to what keep on one dragging to the payment to the supplier. They think that we can maintain the liquidity positions, but that is not a case. You'll have to balance that one, right? Anjana, have you calculated controllable profit ROI for both divisions? Are you all done? Yes, Sanjana has got P 3120, O 4520. Just double check. Same answer. Just calculate the ROI, return on investment. If that is same, just calculate it. Now, before you get started with the ROI, let me know. If you look at the division P, what is their net divisional profit? Based on the report, what they have given to you all, 2520 and 1220. If you just looking these two values, what would be your, idea? What would be your comments? You would say divisions P is what? Performing better than what? Division O. Correct? If you try to work on properly with regard to the what controllable profit, it gives you from the Sanjana's amount P 3120 and O is what? 4520. It's almost what? $1,000 what? Other way around. Am I correct? That is what we have found through the what? Controllable profit. Now quickly calculate the controllable what? Net assets and get the what? ROI. What's the answer? ROI. Sanjana has got 17.53 by anything is okay for two decimal places and 17.19 over 17.2. That's not a problem. That's correct. Now I'll quickly explain to you, right? Let's talk about the division P and O, right? This is division P. This is divisions O. First one is what? Revenue. Revenue. Division P $14,000. Correct? Division O 18,800. We didn't take the what? Gain or on sale of what? Equipment. Why? Why we have not taken the gain on sale of equipment? Which was the decision which was taken by the what? Head office. That's the reason it has been what? Excluded from the what? Controllable profit part. Correct? But anyway, that is one part of our requirement in the B, part B. We will try to do the interpretation when it comes to what? Part B, right? Next one is cost. Am I correct? Cost. First one is direct labor. Direct labor. Which is how much? 2,400 here. Here 3,500. Am I correct? Next one is what? Direct material. Material. 4,800. Next one is what? 6,500. Next one is what? Divisional profits. sorry, divisional expenses, divisional expenses, divisional expense overhead, divisional overhead, excluding what? Depreciation, excluding depreciation. If you look at division P from 3700, we'll have to subtract how much? 3800. 3800 minus how much? 320. That would give you 3480. Am I correct? 3480. If you look at division O, how much the depreciation? 460. So total divisional profit 5000, 5400 minus 460. 5200 minus 460. That would give you how much? 74. Correct. Then exchange gain or lost. Am I correct? So exchange gain or lost, we'll have to pass it to the what? Divisions. Why? What's the reason? Yeah, divisional manager to encourage the sales, the credit period being given as 60 days. Therefore, they are held responsible for the what? Gain or loss on the what? Exchange. Correct? Which is how much? 200 negative here. Exchange gain or loss. Here the loss 200. Here gain 460. Am I correct? That's all, no? Now get me the what? Controllable profit. Profit. How much? 3120. Here 4520. Right, okay. Small point form you just mark based on the controllable profit. Right? It's not required, but just for a safe side. Safe side. What did I say? Based on the controllable profit, it is clear the division's O's profit is higher than division P. O's profit is higher than division P. Excuse me, it's not part of your marking scheme. Why I'm telling that part? For the safe side. Just to show the your examiner, you're going to create a taunt to the examiner, right? To tell them we can't only look at the what numbers, right? What they have given in the question. Each and every element should have been properly what analyzed. Based on the analysis, we found O's is performing well, better than the what P from the profit perspective, right? So you need to go for the conclusion, just to showing them the division's O's profit is what higher than P, right? Next part is controllable non-current assets. So you know how to calculate the what? Capital employed. Capital employed. How to calculate capital employed? Capital employed equals? No, that's okay. That's the way of getting the net assets. Capital employed equals to what? Net assets. How to calculate generally the capital employed? Equity capital plus debt capital. Equity capital plus what? Debt capital. That's the total capital employed. Total capital employed. Or if you're going to calculate the net assets, how to calculate non-current assets? Not current assets plus current assets minus what? Current liability. Agree with me? For these two, we call net current assets. One name is what? Net current asset. Another name is what? Working capital. Working capital. This is the way of calculating what? Net assets or capital employed. Net assets or capital employed. Now quickly let's calculate the what division P and division O. They have clearly given Non-current asset controlled by the divisions. Non-current assets controlled by the divisions. 15,400. Other one is how much? 20,700. Right? Then with that, we can add straight away the working capital. Right? Or not non-current assets. Or add current assets, which is what? Inventories 1,800 and 3,900. Next one is what? Trade receivable. Receivable. How much? 6,200. Yes, 6,200. 8,900. 8,900. Right? Uh, so these are the total assets. From that, you can deduct what? Current liability. Current liability, which is what? First one is what? Overdraft. OD. 500. Here there's no OD. Correct? Next one is what? Trade payable. Payable. This is how much? 5,100. 5,100. And what? 7,200. Now we can get the what? Controllable net assets. Controllable net assets. Right? Or capital employed. Which is how much here? Okay. Here. Is that clear? Online students? Most of them who have got the correct answers. Very good. Now we'll go back to the requirement. Return on investment. Controllable profit. Profit divided by controllable capital employed. Correct? So the controllable profit would be 3,120 divided by 17,800. No, 17,800 for division P. Division O, 4,520 divided by 26,300. Let me know the ratios, please. Here, how many percentage? 2 decimal places. 5. Then 5,3. 17.53. No problem. We can continue with the 3 or 4 decimal place or 1 decimal place. No problem at all. Here, then 17.20 percentage. 1, 1, 8. One. Those 3 girls are absent, no? Right. Put a star mark and write under that answer. It is very clear. To evaluate the divisional performance, that controllable profit controllable profit, and controllable capital employed. Has been used. Has been used. Clear? Now, can you go back to the part B, please? Part B, please. What is the requirement? Can you read the requirement? Right, okay. Some of the items have been but excluded, some have but included. Why you have taken such an assumption? How many marks? 8 marks interpretation should have been given, right? So let's get started with the item by item, right? Before we get started with item by item, we'll give a small introduction. We will give a small introduction. Take down the introduction. The return on investment have been calculated have been calculated by applying the principle of controllability concept. Controllability concept. Full stop and continue. This principle states the managers should be held responsible. The manager should be held responsible for areas which they can control. That's the reason some expenses have been included, some have been but excluded. What is it? Red? Now we will explain a couple of examples with regard to the what some we have excluded, some we have what but there are some expenses we don't need to explain. Say for example, material. You know what is exact, because all variable costs are what? Controllable cost by the particular division, right? All specific fixed cost also what? Controllable by the particular division. There are some expenses which we have a doubt whether to include or exclude. Why we have included, why we have excluded, we'll have to give a evidence, right? So that evidence also should come from the what case? Evidence, we can't create the evidence. But all variable costs are what? Controllable costs. All specific fixed costs are what? Controllable costs. But what I'm telling you, from this case, some expenses are what? Controllable by the managers, head office, some are what? For the divisional manager. So that also we are going to derive from the what? Case, right? Small heading. First one is gain on sale of equipment. Gain on sale of equipment. Sale of equipment. Mark on that. This has been excluded from the profit figure. This has been excluded from the profit figure. Since the decision was taken by the head office to, since the head office has taken the decision to dispose of a large amount of equipment, in division P. Do you agree with me? Do you agree with my point? But this question is very easy. Performance measurement questions are very easy if you understood the question, because all the answers are in the question itself. You don't really find out any new answers. But if you read the question properly, if you try to understand the question properly, you can answer, because generally we do calculate only ROI and RI. Then only the interpretation part. The interpretation also coming from the what case. You don't give any new points, right? Therefore, it's very easy to what collect the marks where in the exam when you get a questions under what performance measurement, right? Then you can complete that sentence. The divisional manager had no control over this decision. Next one, you can explain about the divisional overhead. Which amount we have taken? Yeah, after subtracting depreciation, because that depreciation belongs to what? Head office. Uncontrollable by the what? Divisions. Can you make a note on that on your own English word for that one? Divisional overhead. It's very clear. Net overhead being taken to the account. Net divisional overhead being taken to the account. Within the bracket, you will have to mark what? Divisional overheads minus what? Head office depreciation. You have taken the divisional net amount, no, divisional overhead, net divisional amount. How you have calculated net divisional amount? You can put it in the bracket. Divisional overhead minus what? Depreciation. You can say this is full stop and continue. This is because divisional managers. This is because divisional manager do not control some of the assets. some of the assets. Right. What about exchange gain and losses? Who's responsible? Excluded or included? Included. Why? Why it has been included? Since since the credit period, which was decided by what? Divisional manager. They are the people who have set as about 60 days time. Therefore, that loss and profits or the loss and gain should be taken care by the divisional managers. For this one, of course, very short answer. Very short answer. Am I correct? I have taken the answers from where? From the case. Next one is what? Exceptional cost of factory closure. Am I correct? Include or exclude? Why? Head office to close some of the branches where in the division P and to start up what new branches future somewhere else. Am I correct? You can write down the same point. Exceptional cost of the factory closes. This decision, which was taken by the head office to close some branches were in the division O. Therefore, divisional manager do not have control on that. Then it is excluded from controllable profit. Next, another two more elements you can explain the what head office cost. Included or excluded? Why? Head office cost. It is borne by the what? Head office, not part and parcel of what? Divisional manager. Next one is what? Last one. Uncontrollable non-current assets. Am I correct? Is that understandable? The way of interpreting the answers. So don't forget, whenever you do evaluate the performances of the what divisions or the company, divisions or company, you'll have to check the item line by line, right? By just looking only one value, by just looking the profit, don't take the decision whether the company is what performing what, uh, you know, uh, how can I put it? Whether good manner or not. Am I correct? So don't look at the only the what profit figures. Line by line, you'll have to check the performances, right? Let's have a break. Right after the break, we'll try to answer for the C part and D. Then we'll move to the another past papers question. Very interesting. So this give you the broader knowledge. This past papers question will give you the broader knowledge with regard to the performance measurement, right? Take a break. Right. Shall we continue? What is the requirement? Part C. How many marks? What's the requirement? Part C. Yes, how many marks? 2 marks. Small area, right? Since it's a 2 marks, you can write down around 50 to 60 words. It's a more than enough. Not even 50. 50 words is more than enough. Is it? Because what the requirement? Is it appropriate to treat as an investment center? What do you think? What do you think? Is it a why? What's the evidence? For what? Very good. Very good answer. At the very outset, don't say it's not recommended or it's recommended. Right? First, what you have to what you have to do is small definition with regard to the what investment center. Take down. An investment center is a type of responsibility center an investment center is a type of a responsibility center in which managers have responsibility for not only cost and expenses but also for investment in working capital and non-current assets. Within the bracket, you can say what capital employed. Right? For the above scenario, it is clearly defined they have responsibility over some of the assets. They have responsibility over some of the assets only maximum $15,000, which is a relatively small amount amount, comma, suggesting that treatment as an investment center is not appropriate. Excuse me, don't give the answer just saying only that 15,000 part, right? So they are first talking about the investment center. No? First, give a small introduction. You need to go for an introduction like what I have given because only 2 marks. No? It's only 2 marks. Small introduction, which is meant by what investment center, and talk about the case. Case clearly stated what they have given the responsibility for the capital expenditure only the maximum what 15,000. Therefore, it is not a good thing to what saying as an investment center. The head office can bring that division under their control, right? Then they can closely monitor the operations. Am I correct? Right. Okay. Shall we move on to the next part of the requirement? What is the next part? Next part of the requirement. Right. Okay. So basically, what are the drawbacks of what? ROI. What are the drawbacks that you would see the ROI? ROI drawbacks. Measuring the manager's performance to use the ROI. What are the drawbacks? We have done the C part. Let's have a look. Right. Now we are in D. Part D. Problem of using ROI. What are the problems that you could see? Sorry? Yes. Looking at the instead of what? Instead of cash flows. It's very subjective. Do you all agree with me? It is open for the manipulations. It is open for what? Manipulation. If they are using the profit instead of what? Cash flows, it's very subjective. It is open for what? Manipulations. You can manipulate the accounts, no? Am I correct? If the divisional performance are checked based on the profit, they can what increase and decrease the profit by using the what different concept and standard which you have learned where in financial accounting. Am I correct? What else? What are main other drawbacks? Yes, very close. Looking the percentage. Uh, what numbers? You are talking about that absolute figure would be more appropriate than looking the what relative. Right. I will put it this way. There are two division A and division B. Right? Profit. Right? Forget about the controlling profit and all. A 100, B 500. What is the best performing company? Sorry, best performing divisions? B. Then B divisional managers B would be given what? More bonus. Correct? Right? What is the profit ratio now? 10%. Sorry, 1,000. Yeah, 10%. Here, 4%. Just check. Now, what is more what appropriate? Checking the percentage one return on investment or just checking the absolute value? Why? I can prove it to you. If you look at division B, they have made a profit of what $500 from the what 20,000 investment. Do you agree with me? From the 20,000, that may be about bigger divisions. That may be about different company. Am I correct? Maybe about different companies. Or it has been located at different place. So by just comparing the absolute values, it does not give you the proper picture. But your answer, I have got the part of what correct. Some part is what missing. Telling me the bits and pieces. Can you put it the proper explanations on that? Before the receivables are? I don't understand what you are trying to say. What it means? One answer what you have given me is correct. It's very subjective since we have used what? Profit instead of the cash flows. Therefore, it is open for a what? Manipulation. ROI. Second, you said what we are using the I don't agree with that answer. You said what we are using the percentage instead of what absolute values. But I said that this is what absolute values. If you would have taken a decision based on the absolute values, your decision is wrong because you know why? You are making the fund $500 profit from what? 20,000 your investment. Whereas division A making 100 profit from what? 10,000 profits. Sorry, 10,000 capital employed. What else? But you were trying to say something. You came to say something. You said what? Receivables, but I don't understand what you are trying to say over there. Receivable what? No, receivable. Yeah, it's not connected with ROI. Receivable, we are going to put into the what? Under capital employed. Okay. That's the reason we are because what is exactly meant by performance measurement? Just to compare the two divisions, benchmark, right? And you all come up with some other because they have given the last part of what question, some other part of the what element, other ratios element, which is that they have given one more part, cost of capital. ROI does not take to the account of what cost of capital. Because if you want to analyze in detail, you should check if that amount capital employees, how much is giving you the what cost of capital return. Whether that what profit, controllable profit is what more than the what market return or the less than the market return. So RI would be what much more what advanced than what then again what ROI, return on investment. Because if you look at the residual income, residual RI, residual income is giving you what broader picture than the what ROI. ROI does not take to the account of what cost of capital. What else? The important one. How to calculate ROI? Controllable profit divided by controllable capital employed. If you keep on decreasing this capital employed, right, you can increase the ROI. Do you agree with me? You keep on what decreasing capital employed. How? I just put some figure. 10 out of 200 is 5%. Sorry, 5%. If you want to increase the ROI, what you can do is 10, the same amount. You can make it 100, which would give you amount 10%. If you want to make the more ROI, you can keep on what decreasing the what capital employed. There's a one option of what capital employees. One option is what non-current assets. If you are not replacing the non-current assets with the proper lifetime period, right? Every assets has an economic lifetime period. Am I correct? You can't keep on what using the same assets, right? for a longer period, as we will be learning in APM also, annualized equivalent cost, that replacement cost, or the every non-current asset should have been what replaced proper what period. Because you know why? As the aging the assets, the productivity of the non-current assets what will fall. Therefore, what the divisional manager can do, they can keep the assets to be what older. Why? If they are keeping on the older, you know how to calculate the what net assets. Cost minus accumulated depreciations equals what net book value. Do you agree with me? If you keep on what assets older, your accumulated depreciation will increase, net book value what will reduce, then you can reduce the what capital employed. Am I correct? You can reduce the what capital employed. By reducing the capital employed, you can increase the what ROI. But if you look at the detailed picture with regard to that particular operations, it's not a good move. It's not a sustainable move. Why? If the assets getting older, from the assets, the benefit, productivity that you are going to generate is what? Less. Am I correct? Because what I'm asking from you all, after you are giving the complete autonomy for the divisions, right? So divisional manager, if they are, given the autonomy and if they are checked based on the performances, the one way of checking their performances is what ROI, return on investment. So their bonus will be given based on the what? ROI. Then what they try to do is they will try to what? Keep on what? Increasing the ROI. It happens everywhere. It happens everywhere. So if they try to keep on what? Increasing the ROI, what is the one, that's what you said, I can bring that part for the manipulation one side. Manipulations. But on the other side, to decrease our capital employed, what we can do is we can keep on using the same assets, all the assets, aging assets, right? So overall perspective, for the company's perspective, from the assets, the benefit that you're going to get would be what? Less. The productivity is what? Very less from the assets. But these people are not what? Willing to what? Replace the assets by focusing the what? ROI. I hope you all understood my point, what I'm trying to say. So different angle you can, it's all about what? Tricks and hacks. Does not mean ROI is one of the best measurement to check the performance of the divisions. Okay, acceptable. There are some weakness. Coin has two sides. Story has two sides. Every action there will be a reaction. Am I correct? Whether you have like it or not, we'll have to face it. That's a fact. That's a fact. Because you can put that part as a what? Positive way, or you can put it into the what? Negative way. Because the requirement is what? What are the problems that you are going to face with regard to the what? ROI. Also, the last sentence the company says what? The question says what? Company has a plan to introduce a what? RI, residual income, instead of what? ROI. So once again, RI shall not give you the what? Final solutions. It's not going to give you the what? Final solutions. There are some problem also what? RI. Very difficult to find out the cost of capital. Am I correct? There are some problem. So that is all about what? This part of the question. Shall we mark this idea quickly? Take down. First para. ROI is based on accounting profit. Which are subjective. Rather than cash flows. It is therefore open for manipulations. Right? Online student, are you all with me? Am I getting the rate? Sanjana, Malavika, Navya, Nisho, Joel, Rachana, Tarunika, Senthil Kumar. I always used to say it's a two ways approach. When you are talking, I can get some inputs. Am I correct? So I'm just explaining what I understood, right? So some of the answer I can get from you all when we are discussing the question. That will be an input for me for my future classes. That's why always I try to discuss with you all. Am I correct? You, because you have come up with a couple of points. Really appreciate what you have heard, but we'll have to argue whether that is correct or wrong. Am I correct? Really appreciate your idea. But at the same time, I just want you all to talk. As much as you are talking, you can get what? More knowledge. Am I correct? Then only you can rectify. Because if when you are trying to write these answers behind the exam, sometime you will be losing the marks for the what good points also. They think this person who have given the what wrong answer, which means what he doesn't know anything about what this particular topic. Therefore, each and every point you'll have to be very careful. You have to come up with the evidence. Evidence is much more important when it comes to the exam. But always I keep on talking about what exam, because exam is what our main intention. You all have come here, I have come here. Everything is what ultimate objective would be to pass the exam. Am I correct? So for that only I'm just putting this work. But I'm really disappointed with the what few students who are taking the break. So some people who wants to go for the exam, but they don't come for the classes properly, right? So some people who are in the class physically, but mentally somewhere else. Am I correct? But you all I really appreciate, but I just missed those three girls today for there's a physical session. For online, I really appreciate some of the students' work. You all have worked with me. I hope that you would be able to pass the exam. If you keep on continuing for next couple of weeks, right? You are having exam once again March 5th, right? You work for another, but you have time, almost 3 weeks time. These 3 weeks is more than enough for PM. But you have to start from the scratch. Right? Try to do most past papers question, what we did in the class. Don't look at the what question and answer. First read the question, take the summary of the question. What there, because there are some question even for me it's very tough. To be honest, I'm telling you, when I'm reading some question, it's headache for me. I also putting the effort. I also take too much of a time to get the answer for those questions. Sometimes. But even the question what we are discussing now, I didn't go through last time this question. I did only the next question, which is car oil industry. But this question first time I'm doing. So when I'm doing this question, I understood it's a very good question. It's giving the broader picture with regard to the what performance measurement. Right? So I have expected from you all that part. But some people who did it, you will be getting the benefit. Those who did it. Those who have not done, you'll have to pay a price. That's up to you. I can't force anyone to what study. I can give you the advice. I can't give you the warning. That's all, right? Okay, come back to the point, because there's a guy who used to come. I can't remember his name. What is his name? Hari. But only one class he has joined us what online. After that, he is not there. But some people who I'm not talking about him. Some people who think that by referring the recording, by doing some questions at last minute, would be able to make it happen. Because some area, because you tell me, even you can't wait and watch 3 hours movie. Am I correct or wrong? Even when you are getting into the song, you will try to what? Forward it. Am I correct? Sometime, but if you think that part is not relevant, you try to what? Forward. Am I correct? Even for 2.5 hours movie, you can't watch it. Just imagine watching what this 4.5 hours but recording. Even initial my plan was to put the class until 1:30. I said the very first class, but late I realized it's a too much of but workload for you all. That's why I just put more classes. I reduce the number of hours because the management have given me the time to finish the class today. Today is the last day with the revisions. So my request only, I just manage my time to what 4 hours, 4.5 hours maximum with the break. right? So we fix it, what, 4.5 hours for each and every classes, not for 5 hours. Because as you go by, sometimes the productivity will come down. It's your hand, but I don't know whether you have got the benefit or not, right? Uh, Sometime you would have learned from the different lecturer for this module, the knowledge level. I don't know how far you understood, how far you have learned, how far you are satisfied. That's up to you. Because 5 fingers, right? It gives you the different duties. Am I correct? Different people have a different perceptions. Am I correct? Also, when it comes to lectures, it is very challenging task. You know why? We'll have to target for all the people. If there are 100 people, 100 people's knowledge are different. Do you agree with me? All 100 people's knowledges are different. So we'll have to teach for the whole class, not for what selected people. When I'm targeting the what for the people who are what exceptional, so others won't understand. Balance 90% is gone. When I try to target the what average person, the exceptional case, he thinks he's very slow. He doesn't do more questions. Then some people who may give a comments try to do more question. Can I do more question than what I'm doing in the class? Every class we are doing only questions. We are, because I'm just picking from the past people. Am I correct? Only we are doing a questions, no? Only less part I'm doing the explanation with regard to the what concept. More on what question. The rest of the part, it should have been done by yourself. You can refer the ACC Hub. You have the question and answers. You can check the question and you can check the answers. Am I correct? Right after you, because some people, they try to check the question and answer. That won't work out. You do first, make mistakes, prove the mistake, learn. Then you won't make mistakes when the exam. So I can't keep on giving the sermon each and every class, right? So it's up to you. Okay, come back to the point. Uh, so these are the points that needs to be what highlighted when it comes to the problem of what ROI. Shall we quickly mark this point? So first point I have explained to you. Second point, the main disadvantage of using ROI is that the percentage increases as assets gets older. As assets get older. Full stop and continue. This is because the carrying value of the assets decreases as a result of higher accumulated depreciation. As a result of higher accumulated depreciation. Then what will happen? Capital employees what? Fall. Hence, hence, capital employed falls. Full stop and continue. This can lead manages to hold all assets for longer period rather than replace them especially when they are bonus are linked to ROI. Excuse me. We can complete this sentence with this case also. One more point. If you look at division P, look at the case of the uh, questions. Look at the questions. Division P. Who made an investment of the what non-current assets for division P? During the year, look at during the year, head office made a decision to sell a large amount of equipment for division what P and replace it with what more technological advanced equipment. So indirectly, we can come to the conclusion P is working for what suboptimal decision to get what more bonus. Do you agree with me? If that happens, they can what get what more ROI. They can get what more bonus. So that point you can connect with that particular answer, right? Can you connect that one? Then you can say it may be the sometime it may be the reasons. It sometime it may be the reason that these manager would not have made any investment to replace more advanced technology equipment, right? Also, you can talk about the cost of capital part. ROI shall not consider cost of capital elements into the account. Right? So if you'd have considered the cost of capital, you'd have calculated what RI. RI would be what more applicable than what ROI. ROI. You can mention that part as well. The last point. So company has a plan due to this problem, due to the above problem, the company is considering whether residual income would be a better method. Residual income would be a better method, as I have copied from case. Shall we try the next questions? 20 marks. Hard literacy. It's also very good questions. Uh, First, what you have to do is you have to attempt the question same way what I have explained to you the previous example. I'll give you 15 minutes time, right? At least can you answer for the part A, which would give you the 8 marks? 8 marks. First, read the questions. Read the question. Just try to underline that you think which is important. Malavika has got the answers as what ROI 28.5 percentage, and this is 11.7 percentage. For there are two divisions, I believe. One is F and N. Just check whether you are getting the same answer. And Malavika, can you try to calculate the bonus as well, please? What about Sanjana? Have you got the answers? You got the bonus? 6 marks. Sorry, altogether 8 marks. 8 marks, 5 and 3. Let it complete in 10, 15 minutes maximum. Maximum 15 minutes. Since we are going to deal with the numbers, Malavika, she has got the answers as what? Yes. For the timing, I'm not. Sanjana says what? 30% for F, 2% for N. Sanjana, is it for a what ROI or as what bonus calculations? Bonus. What is the ROI, Sanjana? Same answer. What Malavika has got. Yes, that's correct. I need a bonus, not percentage, Sanjana. Bonus amount. Bonus amount. Malavika, who shared me the answers. Just want to double check whether others who are getting the same answer, then we can come to the conclusion the answer would be correct or wrong. What about guys here? Yeah, let me. Okay. Okay. What about you? What's the answer? Your one. No, no problem. Even how to calculate ROI? Controllable profit divided by controllable capital employed. That's all. It's not a rocket science. We have already done. What about your answer? No, what's the answer? Okay, I also don't know. We'll double check. We can double check the answers. If that is wrong, you will be losing the entire 20 marks when the exam. How are you going to do the interpretation then? If that basic calculation is wrong, the very small calculations, right? If that is wrong, the entire part of what you. What about you? You answer. Yeah, no problem. What's the answer? 28 point. 28.5. Okay, so next one. I think correct because she also has got the same answer. Who Malavika? Even Sanjana has got the same answer. That must be the correct then. Yeah, yeah, anyway, I'm going to do. That's not a problem. That's my duty. No, three of them are getting with the same answer. Malavika, Sanjana, and you. You got the same answer. You three are got same answer, but all the others only. What about your answer? No, I'm going to do it. No worries. What's the answer? You answer. No, no. What's the answer? Yes, Sanjana's answer 43,200 for bonus, 2,400 for uh, in, sorry. At least for bonus calculation, I can give you the excuse if you would have made a mistakes. No problem. If you would have made a mistake for the bonus calculation, I can give you the excuse. You didn't read the questions properly. Bit of a understanding with regard to the English. This is as long as you understood the English, you could have got the what correct answer for the bonus calculation, I believe, right? No, because if your ROI is wrong, then the bonus is also wrong. Do you agree with me? ROI is wrong, automatically bonus is also wrong. Am I correct? For ROI, I can't give you the excuse because ROI, you should have got the correct answer. What is meant by ROI? Return on investment. ROI equal controllable profit divided by controllable capital employed. So this, of course, you should have got the correct answer. Am I correct? Let's check. Before we get started with the Sanjana says yes, same as what uh, Malavika's answers. Right. Let's get started. Cardell Industry Metal Co. Because why I have expected you to give the answer? All questions are what unique. Because the question that you are going to get performance measurement for what your mock paper is another different type of a question. If I would have explained to you once with regard to the what ROI, from that point onwards, there is no room to make mistakes ROI calculations. I have explained for the one questions, no 20 marks questions. So ROI, how to calculate controllable, because that the previous question is in detail. But here they have given the controllable profit. Look at the questions. They have given the controllable profit as a name of controllable profit. There's no room to make mistakes on that. Am I correct? Still, if you are making a mistake, you should think about it. Look at controllable profit for the both division being given 2645 divided by 1970 for what? FNN. Only the part that you have to calculate the what? Controllable what? Capital employed. As long as if you are able to get the controllable capital employed, you can get the what? ROI, return on investment. I don't know where you all went wrong. It should be seriously what concerned that part. So previous question is what bit of a detail. That's complicated than what this. Here its answer is given. Answer is given. Just put into the calculator only. Right, just have a look. Cardell Industry Metal Co. is a large supplier of industrial metals. The company is split into two divisions, Division F and Division N. Each division operates separately as an what? Investment center. Once again, what is meant by investment center? The division which has complete control on what? Return on mainly what? Return on investment. In addition to that, but because cost and revenue. Apart from the cost and revenue, they have a complete control on the what? Working capital and the non-current asset for their divisions, right? With each of one half having a full control over its non-current assets. They have given what? Clearly. What is meant by investment center? They have what? Complete control over its what? Non-current assets. In addition to both divisions are responsible for their own current asset. That is also they are responsible. And controlling their own level of what? Inventory, cash, having full responsibility of the credit terms granted for the customer and collection of receivable balances. Which means what? Clearly they have given the explanation which is the meaning of what? Investment center. They have given the full autonomy. They have a control on what? All the what? Capital employed, non-current assets, current assets, and the what? Current liability. The entire net assets, they have a what? Complete control. Similarly, each division has a full responsibility for its current liability and deal with it directly with the own. Look at it has a full responsibility for its current liability and deals directly with its own supplier. Is it a company supplier or own supplier? Own supplier. The complete freedom being given to them. They can do whatever they want. Am I correct? Each divisional manager is paid salary 120,000 per annum. Their salary is what? 120,000. Per annum. Per annum. Annual performance related bonus based on the ROI. Bonus based on the what? ROI. Achieved by their division for the year. Each divisional manager is expected to achieve a minimum ROI division is what? 10% per annum. There's a cap on the bonus. There's a cap. Minimum, they should get what? 10%. This is the what we call cap on the bonus. If the managers only meet the 10% target, they are not awarded bonus. Correct, no? They are not awarded bonus if they have what achieved only 10% ROI. However, for each whole percentage point above 10%, I don't understand that part, English. That's the place where most of the students who made mistake, including Malavika and Sanjana. Can you all brief me about that particular sentence, please? However, for each manager, however, for each whole percentage point about 10% of with the division achieved for the year. What does that mean? That's not a problem. 1% means, sorry. Mm, mm, mm. Yeah, that's correct. Perfect. Perfect. That is what the English. What they say, the bonus should have been given for the what whole percentage only. Let's say there's a division. Example. There's a division. Division, let's say A. Example. For instance, let's take division A. Their ROI 15.99 percentage. Then bonus will be given about 10 percentage. Is it for the 5 or is it for 6? Is it for 5? That is what they say. The bonus should have been given only for the what? Whole percentages, not for the decimal. But what you try to do in the exam, 15.99, the nearest whole number is what? 16 percentage. Therefore, bonus will have to be what? Issued or should have been given for what? 6. That is wrong. Here, what they say, I don't say, the question says. It's not my argument. Question says what? The bonus should have been given for the what your divisional manager only for the whole percentage. That's a place I believe Sanjana and Malavika who all made mistakes. Do you all agree with me? Sanjana and Malavika? Still I didn't get the ROI. Still I didn't get the ROI. Then only my devil will come out now. Because I have expected you to give me the correct answers. Right? Where you went wrong then? Yeah, okay. You tell me. Can we, because I have given the notes also, no, in depth, in detail, step by step I have explained to you. Can we take the what head office expenses as an what for the controllable profit? No. Where you went wrong, sir? But you have taken the net profit. What about you? No, no, because no excuse at all for this. If it was happened for the previous example, okay. Sanjana says, she says I did for 18% and one for every get two. I'll first complete Sanjana, then I'll come to your point. Just give me some time, right? Okay. Therefore, which means there's a cap on the bonus. Minimum target is what 10%. If anybody who gets what about 10%, bonus should be given for that what additional percentage. For that additional percentage, only for the what whole percentage. Even 15.99, the bonus should have been given for only 5%, not for 6%. Bonus equivalent to 2% of what annual salary is paid. Then bonus equals to 2% of annual salary, 120,000. That is what $2,400 per percentage. Do you agree with me? Every 1%, 2,400 which will be given. Subject to maximum bonus equivalent to 30% of annual salary. There's a cap once again. Maximum bonus. Maximum bonus should be 30% of their salary. 30% of their salary, 120,000, which would give you what? 36,000. What does that mean? What does that mean? They say what? If anybody who are getting above 36,000, the guaranteed amount is only what? 36,000. Let's say that's correct, Malavika. That amount is correct. 36,000 is correct. The problem for what? Other divisions. Second divisions, I believe. I'm not quite sure. I don't know whether that is also correct, Malavika. I will double check. I don't know the answers. We'll double check. I remember I did long time back, right? Then the maximum bonus should have been given as what? 36,000. Which means if anybody who gets above even 36,000, they will be paid only what? 36,000. This is the information with regard to the what? Case. If you want, please quickly copy. This is a cap on the bonus. Cap on the bonus. Yeah, 36,000. Look at the next table. It's not like a previous question. Very straightforward. Sales they have given. Controllable profit being given. With the controllable profit, they have taken the what? Head office cost. Therefore, they found the net profit. I'm not going to talk about here, let's say the ROI, blah, blah, nothing. My question, by looking this table, by looking these two values, what is the best performing company? Sorry, divisions. What is the best performing division? Do you say F or N? Why? Sorry? No, that you found right after calculating ROI. No, I'm just asking from you all. Just looking this table, these values, you will come to the conclusion, right? You would say, but this is better. This number is more. This number is less. What do you say? Which division is in a sustainable approach? And why? Okay. If you look at the profit figures, profit only, you would say what F is better. Do you agree with me? Because the overall picture, if you look at the what F profit, net profit is 1,380, while N is what 1,280 is 6. If you are going to take a decision based on the profit, you would say what F is what better. Do you agree with me? Right. Now they have given the non-current asset for both divisions. Since for both division they have a complete control, therefore that is what is known as controllable capital employed. So now we can calculate the controllable capital employed if you want. Controllable capital employed for what division F and divisions N are 9,760 plus 2,480. 9,760 plus what? 2,400 2,480 minus what? 1,906. That would give you how much? 9,280. That's the capital employed for division F. Division N, 14,980 plus 3,260 minus 1,400. That would give you how much? 84. Correct? Now, let's read the next para, which is much more important. Much more important. During the year ending 31st August 2005, Division N invested 6.8 million in the new equipment. The last day of the accounts, last day, N, look at the N non-current assets. Comparatively what? Very higher. Am I correct? Comparatively very higher when compared with what? F. But they knew ROI, the company is going to calculate based on the what? Capital employed. That's the major part of the capital employed is what? Non-current asset. By knowing that, still the division N invested what? 6.8 million in the what? New equipment. New equipment. Am I correct? By knowing that. So if you keep on investing that one, what will happen? Your net current assets. Net asset what will increase? Capital employed what will increase? Numerator and denominator. By keeping on increasing the what denominator, you knew that your ROI is what? going to come down. But they could have waited for at least one day. No? Nothing will happen in one day. Look at when they made an investment during the year ending 31st what? August. The same day what they are preparing the final account. Same day they are checking the what perform. This is much more important when you are interpreting the answers. Am I correct? If they would have done that investment on the next day, they could have what reduced their what? Only one day. Can't they wait for a one day? Nothing will happen in one day. You got my point. So, but still what? They did it. You tell me now. This division N, are they working for a what company's objective or the what divisional of profit? Are they acting for the self-interest or acting for the goal congruence? Are they functioning dysfunctionally or what? Corporate objective. What is their intention? To achieve what? Corporate objective. If they are functioning for the what? Divisional profit. If they are dysfunctionally functioning, then what? They could have waited for at least one day. You got my point. New equipment, including the technology advanced cutting machine, which is expected to increase the what? Productivity by 8% per annum. So by doing that investment, their productivity what will increase what? 8%. Not now, later, after some time. Division F has made no investment during the year. They are very cunning. Right? They are very cunning. He didn't make any investment what? During the what? Year. Why? What is the intention? Divisional profit. By increasing the divisional profit, he can get what? More bonus. He can get what? More bonus. Although its computer system is badly needed for what? Updating. Desperately needed for them. Right? Badly needed. But still what? They didn't make an investment. Why? If they would have done the investment capital assets what? Will increase. Then ROI will fall. They won't be getting the what? More bonus. Now it's very clear from the question. It's very clear from the question. The division N is focusing what? Company's goal congruence. Whereas division F is focusing the what? Divisional profit to get the bonus. Do you all agree with me? Do you all agree with me? So I understood through the what question itself, right? Division F manager has said they have already had to delay payment to supplier. Who? Who is making a delay payment to supplier? F. So if you are jeopardizing the relationship with the supplier, it will impact not only for the what that division, but it will impact the what whole company. Do you agree with me? Why? They won't supply the goods for the even other division because it comes under one company. But they are delaying the payment to what? Supplier. Since they are delaying the payment to supplier, look at the cash position of the company. If you look at a cash position around, let's say the division F 2,480, division N 3,260, 3,260. Look at the payables amount. Look at the payables amount. N how much? 1,400. Whereas here what? F 2,960. Why? Why 2,960? They are making the delay payment to what? Supply. Purposely they are doing. Purposely they are doing. Am I correct? All the payments to supplier because of limited cash and computer system will just have to wait. Although the cash balance of division F is still better than what? That also given for us. Whose cash position is about better? F, but still they are making a delay payment to supply. That's the reason the payable balance is what? Very high. Payable amount is what? Very high when compared with what division N. Now it's, if you read these questions, the case, it's very clear. Division F is focusing for what? Divisional profit. N is focusing the what? Company's goal congruence. That's a summary of what this question. If I cut short everything. Clear? Right. Now let's go back to the questions. Go back to the question. For each divisions, For the year ended 31st August 2005, calculate appropriate closing return on investment on which the payment and the management bonus will be based. Briefly justify the figure used in your calculation. Right. ROI, as you said, controllable profit divided by controllable capital employed. So there are two division F and N. F and N. What is the controllable profit for F? 26,445 divided by 5 divided by capital employed. We have calculated just before. So 9,280. That would give you how many percentage? 28.5%. Division N, 1,000. 840. That would give you how much? 11 points. Just calculate again. So the answer is different here. No, my question is 1,970 divided by 16,840. You were talking about something else. What you said? No. I want to give the answer for that one. But that already included, no? If they would have mentioned that it has not included, you can include that one. That is statement being prepared, what? 31st August 2005, no? After including that amount only. Am I correct? Now this is the ROI. So here, calculation part and what? You have to give a small interpretation with regard to the what? Controllable profit, how you have calculated ROI. Put a star mark in, right? In both calculations, controllable profit and controllable capital employed have been used since the divisional managers are held responsible only what is controllable by them. Right? Next point. Net profit has been excluded. Since divisional manager do not have control on head office expenses. Very easy. Am I correct? So this part, of course, you can't lose the marks where in the exam. There's no room to what lose the marks. What is the next part of the requirement? Bonus, right? Bonus calculations. Bonus. If you look at division F, they will be given bonus for 18%. Am I correct? Because the bonus which would be given above what? 10%. Also, we'll be taking only the what? All numbers, all percentage. That is what? 18 times 1000. How much? The bonus? 2400. Correct? Or 1200? 1200. No? Every percentage, the bonus is calculated. No, we calculated here. Bonus is what? 2400. 2400. 2400. Therefore, 18 times 2400. That would give you how much? 40? Yeah. Get me the. Yeah. First let's calculate the amount. How much? 43,200. But we can't give 43,200. Since there's a cap on the bonus is how much? 36,000. You want to calculate its total salary if you want, but it's not part of the requirement. Total salary would be 120,000 plus what? 36,000, 156,000. If you look at manager N, he will be given the bonus only for 1%. Do you agree with me? 1% times what? 2,400. That will give you how much? 2,400 as a bonus. 2,400 as a bonus. His total salary would be 120,000 plus what? 2,400, which is 120,400. Is that understandable? But it is not a part of what requirement. Only the requirement is bonus. You can calculate what? Only bonus, right? It is not required for you. I think the next question going to be a handy. They may ask a question from you whether this is what fair or not. First, let's discuss and then we will write down the answers. What do you think? Is it fair or unfair? I need evidence also. What do you think? What is the requirement? Read the requirement. I'm sure that pretty much sure it's going to be handy. They will ask whether the dealing is what? Fair or unfair. Can you come again, please? What do you agree? What do you think? What do you think? Is it fair or unfair? But at the very outset, don't say it's unfair. But they are going to give a bonus based on what? ROI. It is a mathematical expression. Do you agree with me? As you said earlier, you said what? Mathematical expression. You're putting two numbers. Just putting two numbers and evaluating the performance is what? It's unfair. But if you want to increase or decrease the percentage, you can manipulate the numbers. We have already discussed with regard to the ROI one problem. It is what subjective, since we are dealing with the profits. That is what completely subjective. One reason what you can do is you can what reduce the what non-current assets. Sometimes it's desperately needed, but you don't go and buy that one, right? Next one, we talked about what some of the accounting concept standard that you have already discussed, right? If you want to underestimate what your cost or the revenue, you can manipulate the what your standards. You remember we talked about that part. You have done that part. What stock valuation model, FIFO model, LIFECO model, FCO model, depreciation, straight line method, reducing different method that can be used to what manipulate what your accounts. Am I correct? ROI, it's a one of the mathematical expression, right? By using the numerator and the what denominator. If you want to increase the ROI, you can increase the numerator by using the what different accounting concept, and you can reduce the what denominator. That is what I said. We even for the previous example we discussed, they keep on delaying the what investment behind the non-current assets, and they accumulated depreciation what which would increase. Am I correct? What else? What we can talk about what this company? Look at its overall picture. The bonus from the from this question, what we understood, bonus was given based on the ROI. The divisions N is what getting more bonus than the sorry. The division F is getting what more bonus than the division N. Holistic point of view, division N is working for what to achieve the company's what corporate objective. Am I correct? That's the reason they made a what investment in the equipment by knowing that they are going to get what less bonus because of that. You all agree with me? But at the same time, it's very clear if you look at the division F is working to achieve the what divisional profit. They are making a what delay payment to what supplier. On the other side, what they are the equipment or computer something is what desperate badly needed, but they didn't make an investment. They didn't make a what investment on that. So then by using the ROI calculation, the person who is working for the company not awarded. The person who is working to get the what bonus is awarded. How can you say then fair deal? That is. You got my point. I hope you understood my argument. What else we can discuss? What else we can discuss? If you are going to calculate the net profit ratio, same question. If you are going to calculate the net profit ratio, look at the net profit ratio for both company F and N. What is the net profit? 1300 and divided by what is the sales? 14,500. What is the percentage? 9.5. For N, what is the net profit? 1,286 divided by sales is how much? What is the percentage? And if you are going to take the net profit percentage, who is performing well? Who is performing well? N is performing well. But we took only the what ROI. If you are going to evaluate their performance by taking the what only the net profit ratio, then N should have been given what more bonus than the what F. What else we can discuss? What else we can discuss? Yes, of course. We can discuss about the trade payable. They are making the what? delay payment to what? Supplier, as long as what? If you have a sufficient cash, you can make a what? Payment to the supplier. Then you can have a good relationship with what? Supplier. By doing that, you are going to jeopardize what? Relations with what? Supplier. End of the day, that will impact to what? Your company's operations future. That will give a taunt to what? Wrong image with regard to the what? Company's picture. Am I correct? All these points that you can discuss under this area. So I will dictate few points. A few you will have to take down. How many marks for that question? Yeah. Therefore, the first line itself, as I have told you last time, don't say it's unfair. Don't start the word of what it's unfair. Right? You can start. ROA is the mathematical expression. Is a mathematical expression. Also, one more point. Excuse me. One more point we can discuss. If you look at, excuse me, if you look at employees were in that particular division, division F and division N, F and N, they will be demotivated. Do you agree with me? Why? Divisions N is working to achieve the what? Company's objective. Whereas division F is what? Working to achieve what? Suboptimal decision or what? The divisional profit. But they are awarded. These people are what? Not awarded. Am I correct? These are the problems that you can encounter when it comes to what? ROI. Excuse me, are you all with me? Sanjana, Navya, Malavika. But where did it stop? It's a mathematical expression. It's explaining, and it's explaining only the controllable profit and the controllable capital employed. But based on the holistic view, holistic view, entire part of this companies should have been what? Evaluated. Right? Second para. Total assets of the division N, total assets of the divisions N are almost double the total assets of division F. Division of F. Full stop and continue. This is largely attributable largely attributable to the fact that the division N is invested N is invested 6.8 million in new equipment. 6.8 million in new equipment during the year. Right? Full stop and continue. If this investment could have been delayed, then the division would have got more bonus. They would have got what? More bonus. Am I correct? So next para you can discuss about what? Payable. Also you can talk about what the divisions in that investment. The non-computer or what? Yeah, division F. Yeah. Division F. Has made no investment during the year. Has made no investment during the year. Although its computer system is badly needed. Because the divisional managers targets to achieve more bonus. Also, they are making delay payments to supply. Even they have but sufficient cash balance. Next line. To evaluate the performance of the division, if the company would have calculated profit margin from the sales, then the performance of the division would be other way around. Performance of the division would be other way around. Agree with me? We have calculated, but you can show either way you can calculate the profit ratio. By using the controllable profit also you can calculate the profit ratio, because net profit margin, the general idea is net profit divided by sales, no? Or you can say what? Controllable profit divided by sales for both divisions separately. Still, you'll be getting what? More profit ratio for what? Division what? N. Am I correct? So after highlighting all these points, you can come to the last point. Last point. That's the part where you are going to give a is unfair, proving that's unfair, right? Just take down the last point. The use of ROI, the use of ROI is leading to suboptimal decisions. Suboptimal decisions. And lack of goal congruence. Lack of goal congruence. Come on. As what is good for the manager, what is good for the manager, it's not good for the company. And vice versa. Other way around. And vice versa. Full stop and continue. The manager of division N still acting for the benefit of the company. But the other manager is not. Therefore, the facts which are being enumerated above, it is unfair of giving bonus based on ROI. How many marks? Yeah, more than enough. But this is the way you'll have to bring the story. This is the tone that you have to give to the you examine. You have to explain line by line each and every point. And you'll have to prove it the reason. Due to the above reasons, we are advising ROA is a not good matrix to give a bonus to the managers. Understand what I said? Right. What is the last questions? Right. Right. Okay. So there are 3 or 4 parts where in the question. How many marks? 5 marks. Therefore, first part of the requirement is what? Discuss the strength and weaknesses. Copy and paste from the my PowerPoint or my study material. It's there. ROI is what the first one is what you can say it can be understood by the non-financial manager. It's easy to understand by the non-financial manager. and it can be used to compare the performance between different size divisions. It can be used to compare the performance between different size divisions. Right? Next one is it is not required with the cost of capital. Cost of capital. So what are the weaknesses of ROI? ROI weaknesses. Yes, rather saying the in one word unfair method, but why do you say unfair method? Through the previous calculations, right? So you can say what, for to connect this point with that particular case, it's very unfair to give a ROI the bonus, since the calculation is not giving the holistic point of the company. It's taking the only the small part of the what company, right? Let's take down quickly 1 or 2 points. ROI may lead to ROI may lead to dysfunctional decisions. Right? Then you can say ROI does not take the holistic view, right? It takes only the what? Divisional view. Holistic view. It takes only the what? Divisional view. What is the next part of the question? Other methods. No, before ROI, there's another part. No, RI also. Are they talking about RI also? Because there are some advantages of RI. Take down RI strength over the advantages. RI performance measure should ensure the division make decisions make decision which are in the best interest of the group as whole. Which are in the best interest of the group as whole. You can mention about weakness. Residual income is not useful for comparing the divisions of different sizes. Different sizes. Different sizes. Can you all explain me? Excuse me. RI is not useful for if the company has a what different size, but ROI is what useful to check the what performance if the company is having a what different size. Why? Yeah, one reason is for cost of capital. Another reason is different division. We would have given a what different amount of what investment. Am I correct? Therefore, that capital employed by cost of capital and the controllable profit. If the company is having a two different divisions, their profit is of course obviously what different. Am I clear to you? Therefore, it's not recommended for if the company is having a different or division has a what different size. What is the last part of the requirement? What are the what are the other two methods that you can suggest apart from these two performance metrics? No, those are what profit because it comes under because profits and everything, right? That's profitable ratios. No, all these ratios being what given where in our topic. Anything that you can introduce apart from our topic, any performance evaluations technique that you can introduce. Excuse me. If you look at this case, it's very clear when we are working with the numbers. When we are working with the numbers, it's very clear the division what n is performing better than what f is performing better than the what n through the numbers. That is the conclusion we have got now. If you do a detailed analysis with regard to the what non-financial information, qualitative information, from that we have got the what clear-cut understanding which division is performing for to achieve the company's goal congruence, who is working to achieve the company's profit, division in. So we need to find out the what technique to evaluate the what non-financial performance measurement. One performance measurement which we are going to discuss tomorrow's class, balance scorecard. We can introduce a one technique all what balance scorecard. Through the balance scorecard, we can discuss the not only the financial performances but also for the what non-financial performance. Therefore, one technique you can say what balance scorecard. Balanced scorecard. Have you come across that technique before? No. Norton and Kaplan, which was invented 1978, I believe. We'll be discussing that part tomorrow. Balanced scorecard. Within the bracket, you can mark it focuses financial as well as non-financial performance measurement. Right, that is the technique that I can suggest for this company. Are you clear with the questions now? We have done two questions, but yeah, there's another technique I can say what expected value and all. You can introduce expected value that you can highlight the risk factor if you want. Expected value, EV, is not a new technique, right? Which needs to be highlighted with the what risk. But I don't agree with that part. I agree with the balance scorecard. That is the one and only technique that we can. But as a writing perspective, you can write risk. Then you can discuss about the standard deviation. You can talk about the coefficient of variance. Likewise, there are a number of techniques. That is what everything comes under what risk. The main part is the risk is what expected value. But I would say the balance scorecard is one of the what best technique to evaluate the financial performances and non-financial. Through that, if I want to tell you the truth, we'll be learning tomorrow with regard to the balance scorecard that we talked about story. No, this person is not investing, he is making the delay payment to supplier. Everything will be evaluated through the what balance scorecard. It's a small area, only one page which has been given via in the syllabus. sometime in the different module, you may be learning in detail about the balance score. So one of the very, very important technique. That's why I was wondering, we talked about the beyond budgeting, no? Beyond budgeting. So we can't go with the traditional approach. We have to come up with our non-financial target as well. Am I correct? But the budget only targeting the financial. Non-financial targets come from the word KPIs and the word critical success factor. That is where in the balance scorecard. That's why even I'm wondering, if you have a balance scorecard, you don't talk about the beyond budgeting. Theoretical perspective, they have given all those techniques. In reality, the balance scorecard, which would give you the broader area with regard to all your problem that you are facing with the financial side. Any questions, you can put them forward. Very good question we have discussed, but I think the previous question is better than these questions. It's a bit of a what detailed calculation we did it, how to calculate the controllable profit and the controllable capital employed. For each and every element, we have given the explanations. Are you going for the exam today? Mock. What about physical? Ability. For others, they will be joining. How about Sanjana? You will be. Are you all having any questions, Sanjana? Malavika, Navya, do you have any questions? We can. For mock paper. That's not a problem, because I thought of doing a revision for some question from the way of mock paper, because just to give a, because not all, I will pick randomly the questions everywhere we missed out. That I think it's what hard we will discuss, right? I'm always looking to do some complicated question. Why not to make it scary, but to get more knowledge through the complicated question. I always checking out of the whole past papers, what is the more complicated one. Not once again I'm telling you, don't get me wrong. So every essay type question will open up a knowledge to answer 10-15 OTQ question, section A. Therefore, try your level best to do more complicated section C question. It does not mean don't try the section A. Meantime, you have to get a balance, because some answers are twisted. Any questions from your side? Anything that you want to ask? Have you started to study? Well, you are doing exam this time or next time? You have to. Next time. You are also doing next time. You are doing this time. You are also doing this time. Are you studying here, or do you have any study area over here? Some people are coming over here. Right, okay. That's you. Is that so? It's in the Nungabakam, no town. No, I don't know which side, because you must be better than me. I believe it's on the other side, Paris Road. Correct? Paris Road. It's a US embassy is located towards the Paris Road. Then on the other side. If there are no questions, we can wind up the sessions. Sanjana, are you okay? Malavika, any questions? Right. Wish you all the best for the exam. Exam sometimes it will be very hard. Right? Do your level best. I'm not expecting your real performance. But after doing the exam, you will get to know where are you. What is your position? Then only you will be facing how to manage the time, right? How are we going to tackle the questions where in the exam? Everything that you are going to learn through the mock paper. That's the reason to have a mock paper, just to have a small plan to how are we going to manage our time where in the exam. Right. Thank you very much. See you tomorrow. Would be our last class. Tomorrow we'll be discussing the balance scorecard, a performance measurement for the non-profit organization. Thought of doing one case study, 20 marks questions. And then again, small part is what environmental costing. We will try to cover the whole theory parts tomorrow itself. And if time permits tomorrow, we may start couple of questions here and there, right? Just to do some recap before we get started with the revision. Thank you very much.